Hey everyone, welcome back to our A to Z stock analysis series, where we break down the stocks in the market letter by letter. And today we have got something huge for you. In July 2023, Reliance shareholders got a good news about the demerger of Reliance Strategic Investments into a new entity. Reliance Industry shareholders have received one share of Jio Financials after the demerger of the company. Jio Financials got listed at the price of 265 rupees and it went to the highs of 390, and right now as of 23rd September it is trading at the range of 350 rupees. So what exactly is Jio Financial Services? Well, JFSL or Jio Financial Services Limited is a core investment company, non-deposit taking, systematically important company registered with the Reserve Bank of India. It operates the financial services business through the consumer facing subsidiaries. Now, here is where it's get interesting. Over the next 20 minutes, we are going to dive deep into every aspect of Jio Financial Services. And more importantly, what potential it holds for the future. Or is it time to cash it out? Let's figure it out in this video. First, let's discuss about the business overview. Jio Financial Services operates through various subsidiaries and verticals. Let's find out what are they. First one, Jio Finance Limited, Jio Insurance Broking Limited, Jio Payment Solution Limited, Jio Leasing Services Limited, Jio Payments Bank Limited, Jio BlackRock Joint Venture. Let's understand each business vertical in detail now. First vertical, Jio Finance Limited. It is formerly known as Reliance Retail Finance Limited, a wholly owned subsidiary of Jio Financial Services Limited. It is registered with RBI as a systematically important non-deposit taking NBFC. With a digital first approach, JFL is primarily engaged in corporate lending, consumer lending, and MSME lending. Second vertical, Jio Payments Bank Limited. It is a joint venture between the company and the State Bank of India. The company holds 77.25% of the stake, whereas State Bank of India holds 22.75% of the stake in the company. Jio Payments Bank holds a payment bank license issued by RBI to provide digital banking solutions to small businesses and consumers. Moving to the third vertical, Jio Payment Solution Limited. It is formerly known as Reliance Payment Solution Limited, has an in-principle approval from the RBI to operate as a payment aggregator and to extend services in the fast expanding payments industry. Moving to the next subsidiary, which is Jio Insurance Broking Limited. It is formerly known as Reliance Retail Insurance Broking Limited, obtained its direct broker license from Insurance Regulatory Development Authority of India in 2007. Let's move to the next vertical, Jio BlackRock Joint Venture. On July 26, 2023, JFSL took a significant stride to enter into asset management industry by forming a joint venture with BlackRock, the world's largest asset manager. The strategic partnership is a 50-50 joint venture and is aimed to leverage JFSL's market reach and BlackRock's investment acumen to provide access to the world-class top-tier investment solutions across India. Moving to the last vertical, which is Jio Leasing Services Limited. It is formerly known as Jio Information Aggregator Services Limited, offers operating lease solutions to consumers and small businesses through a DaaS model. DaaS stands for Device as a Service model. According to an SBI report, the India's non-banking financial sector has grown to the third largest in the world. It stands next to the United States and United Kingdom, and that highlights the growing strength of the Indian financial sector. Non-banking financial institutions do not possess a full banking license, so they cannot accept the public deposits. So these entities provide loans to consumers and small-scale businesses, which play a key role in the economic growth of the country. According to a report released by PwC, NBFCs emerged as a crucial source of finances for the large-scale population, along with small, micro, and banks, by offering extended credit offerings to the MSMEs and other unserved segments. India stands at the forefront of digital revolution and is poised to emerge as the world's largest fast-growing digital economies. With affordable data and widespread adoption of smart devices, emerging technologies are driving societal transformation and inclusive growth. QR payments via UPI have already surpassed 30 million transactions per month, and the decreasing cost of technology spurred by advancements in AI have facilitated the development of more efficient and cost-effective solutions. The current wave of digital transformation is fueling the growth of economic development of the country. It is also increasing financial inclusion through innovative digital payment solutions like UPI and formalization of credit with account aggregators network, and plugging revenue leakages using direct benefit transfers, online tax platforms, and FASTag, amongst others. Additionally, India's demographic dividend, increasing savings, and penetration of digitalization provide immense opportunities for JFSL. Now that you have understood the overview of NBFC, it's time for us to get into the strength of the company. First strength of the company, debt-free. Jio Financial Services Limited is a debt-free company. In FY 2023, the company had a debt of around 743 crores, but as of March 2024, the company had no new borrowings and the company is completely debt-free. And this is a positive for the company. Moving to the next strength of the company, which is strong capitalization profile. Jio Finance Limited has a strong capital base with a standalone net worth of 3,830 crores and no new borrowings as of March 31st, 2024. On a consolidated basis, JFSL's net worth stood at 1,39,148 crores, including a 6.1% stake in the Reliance Industries Limited, which is valued at around 1,22,700 crores. JFSL's standalone net worth was 24,437 crores. This strong financial position and the strong promoter support gives an extra compatibility and competitive edge to the Jio Financial Services to get a diversified lender base and also the competitive rates. It will help in enhancing the profitability of the company in the future. Moving to the third important strength, which is brand recognition. The Jio brand, backed by the Reliance Industries, comes with a high trust and credibility in the market. The Jio brand is already well established and has highly trusted, particularly in the areas of telecommunications sector. This strong brand can attract customers for the JFSL's financial products and giving it a competitive edge. Moving to the last strength of the company, which is system integration. Jio Financial Services benefit from its affiliation with broader Reliance ecosystem, which includes telecommunication, retail, and digital services. This integrated approach allows for cross-selling opportunities, leveraging existing customer bases from other segments. There is an interesting deal which got approved by the Reliance shareholders, which shows how Reliance will turn around business strategically. I'm talking about the Jio Leasing Services Limited. Jio Leasing Services Limited offers operating lease solutions to consumers and small-scale businesses through a DaaS model. DaaS stands for Device as a Service model. It is a subscription-based model where a company leases hardware from a company in exchange to the monthly payments. According to the annual report released by Jio Financial Services Limited, they offer a range of products including air fiber devices, IT equipment, solar panels, EV batteries, and ship leases. So this is where we need to talk about a landmark transaction. On June 21, 2024, shareholders of Reliance Industries approved a deal worth $4.3 billion between its units, Reliance Retail and Jio Financial Services. JFSL planned to acquire equipment worth $4.3 billion and it is planning to enter into device leasing business. Through this deal, they will acquire premises equipment, devices, and telecom equipment such as routers and cell phones. In order to connect the dots, we went through several reports, and in the post-ballot report released by Reliance Industries, we found this interesting point. We will purchase customer premises equipment, devices, and telecom equipment from Reliance Retail Limited, which will be provided by JLSL on an operating lease to customers of Reliance Jio Infocomm Limited. The above transaction will be cost plus margin, which is a win-win situation for both the subsidiaries. Furthermore, JLSL has set up a 50-50 joint venture with Reliance International Leasing IFSC Limited and Reliance Strategic Business Ventures for undertaking ship leasing business. Just imagine this. Jio Leasing Services Limited buying telecom equipment which is needed by the Jio Infocomm Limited and it is buying from the Reliance Retail Limited. Interesting, right? Tell me, how do you see this? Whether strength, risk, or just a business gimmick? Let us know in the comments. Now let's move on to the risks of the company. First risk of the company, high PE. The PE of Jio Financial Services Limited is around 139.5, whereas the industry PE is just 24. PE of the company will significantly reduce over the time if the profits and revenue of the company grows. Moving to the next risk of the company. All the business verticals are at nascent stage. Most of the businesses are in the early stage and some are even in the stages of getting approvals and licenses. This looks uncertain because they need to get a lot of permissions in order to carry out operations. According to the CARE ratings, Jio Financial Leasing Services has planned to scale up operations over 2025 and 2026. Additionally, JLSL has commenced ship leasing business and is also planning to venture into aircraft business. It is planning to enter into aircraft business through International Leasing IFSC Limited, a joint venture with another group entity. While the company has established policies and procedures, they remain untested due to its nascent stage. Moving to the next risk of the company, which is regulatory risks. As a financial services company, the company must adhere to the policies set by Reserve Bank of India. Any non-compliance to policies could lead to penalties and sometimes it may lead to operational restrictions. Moving to the next risk of the company, which is high competition. There is a tough competition in this particular sector. For Jio Financials to attain a major market share, it has to struggle a lot in the process. Though the company is backed by strong financial support and strong promoter support, it is very tough to compete in this particular sector because there are well settled and well established players from a long back. For example, the company has a strong competitors like Cholamandalam Finance, Bajaj Finserv, Bajaj Finance, and Shriram Finance. Moving to the last risk of the company, which is credit risk. With so many potential risks and barriers for the JFSL, there is a higher risk for creditors. Credit risk arises when the borrowers fail to meet their financial obligations. Now let's move on to the financials of the company. The company's financial performance between June 2023 and June 2024 shows some ups and downs. Sales grew strongly in September 2023, reaching 608 crores, but dropped back to 414 crores by December. After that, it has mostly stayed flat at 418 crores in March and June 2024. Expenses rose steadily, peaking in March 2024 before dropping again in June. Even though the company kept its operating profit margins high, they dropped from 91% in June 2023 to 77% in December and March, before slightly improving to 82% in June 2024. Net profit also had a big spike in September but softened after. Overall, while the company remains profitable, the flat sales in recent quarters suggest it might face challenge in keeping up growth. Apart from these, there are few important key metrics that we need to discuss. First one, price to book value ratio. We already looked at the PE, but there is another important valuation metric, and that is known as price to book value. The book value of the company is 219 rupees and the current share price as of September 23 is 354 rupees, which is more than the book value. If you do the simple calculation, the price to book value is 1.6 as of September 23. PBV is a very crucial metric, and that is why we discussed in the past financial institutions A to Z stock analysis videos. If you want to understand more about the price to book value, and if you want to know about the A to Z analysis of the financial institutions which we have done in the past, S Bank and IRFC, you can check it here. Moving to the next important metric, which is net interest income. The net interest income, or NII, for Q1 FY25 stood at 161.7 crore, a decline of 15.6% year on year and 42.4% quarter on quarter. This happened because of the low interest income. Moving to the third important point, which is reduction in debtor days. In the financial year 2023, the debtor days were at 113, but it almost came down to the single digit of 3 in the financial year 2024. This indicates the effective recovery of its loans and payments. This is a good sign, but the company must maintain the same in the future in order to sustain its business. If it is clear, let's move to the next section, which is shareholding pattern. The shareholding pattern from September 2023 to June 2024 shows some shifts. Promoters slightly increased their stake to 47.12%, while FIIs and DIIs reduced their stakes, with FII dropping from 21.58% to 17.55% and DIIs from 13.64% to 11.79%. Public ownership steadily grew from 7.86% to 23.39%, and the number of shareholders increased significantly and suggesting rising public interest. Overall, institutional investors are pulling back while individual investors are becoming more involved in the company, and it reflects the changing market dynamics. If you take any company, it may be strong and it have great business, but its future is dependent upon few factors, and we call it as growth triggers. Now let's focus on the growth triggers of the company. First point, the joint venture with BlackRock. In July 2023, the BlackRock Group and Jio Financials announced an agreement to form a 50-50 joint venture. BlackRock's deep expertise and talent in investment management, risk management, and intelligence around capital markets, while JFS contributes local market knowledge, digital infrastructure capabilities, and robust execution capabilities. JFS and BlackRock targeted a $150 million investment each in this joint venture. There is a huge scope for them in the asset management industry. In the past 5 years, the industry AUM has more than doubled, rising from 23.8 trillion rupees in 2019 to 53.40 trillion in 2024. As per the statistics, the Indian asset management industry is growing at a CAGR of 14%. According to the AMFI data, average assets under management of the Indian mutual fund industry for the month of July stood at 64,70,644 crores. It clearly indicates the potential for the Jio Financials along with the BlackRock to tap in the Indian asset management industry. This will contribute higher revenues, and it will help the company to gain more profits in the future. It will be a huge trigger for the company if everything goes as per plan. Let's move on to the next trigger of the company, which is frictionless credit by Reserve Bank of India. The Reserve Bank of India is working on a platform called Public Tech Platform for Frictionless Credit, PTPFC. This platform will streamline the flow of digital information to financial institutions, focusing on areas such as Kisan credit cards, dairy financing, unsecured MSME loans, personal loans, and home loans through participating banks. So this holds a huge opportunity for Jio Financial Services Limited. What do you think? Will frictionless credit by RBI revolutionize the financial sector landscape in India? Let us know in the comment section. Moving to the last important growth trigger of the company, which is India's tech and digital public infrastructure. To promote the use of digital financial services, the Indian government is working on an API-based platform which will simplify the consent-based financial data sharing. This initiative aims to help unbanked individuals and small businesses to get the access to credit. Digital public infrastructure components like account aggregators, open credit enablement network, and open network for digital commerce are expected to become more mainstream in the near future. ONDC in particular is extending its architecture to support key areas like credit, insurance, investments, and gift cards. Again, this is a massive opportunity for various financial subsidiaries of Jio Finance. Now let's move to the last section of the video, which is ESG. ESG stands for Environmental Social Governance. A company with good fundamentals will stand strong in all these sections. First one, environmental. Since climate change is a significant material focus, JFSL, despite commencing its operations in the middle of the year 2023, has been deliberate about its efforts towards climate change and has diligently measured and publicly disclosed its GHG emissions, energy consumption, water usage, and waste management practices. During FY24, the company and its subsidiaries allocated 9.33 crores towards approved CSR initiatives. Moving to the next section, which is social. JFSL launched its first ESG outreach initiative and have made a significant stride in promoting financial empowerment through their ESG outreach program. They organized a financial literacy camp in the underprivileged slums of Mankurd, Mumbai, aimed at raising awareness and providing access to essential financial services. And JFSL had also organized financial awareness initiatives across rural villages and areas in UP and also in Navi Mumbai. And coming to the gender diversity, at JFSL, there are 584 employees, out of which 158 employees are women, and it indicates 27% of women employees. And coming to the last section of the ESG, which is governance. According to several media reports, the Securities Appellate Tribunal had cancelled a penalty of 7 lakh imposed on Jio Financial Services by SEBI in 2023 December. This case involves alleged manipulation in Nifty options in 2017 between Reliance Strategic Investments and Morgan Stanley France. SEBI had fined Reliance Industries in June 2017 for violating regulations in trading. Jio Financial Services appealed SEBI's decision. SAT ruled that SEBI did not properly consider the evidence and that trades were not proven to be manipulative. The tribunal said there was no clear evidence of an agreement to manipulate the market, so the penalty could not stand. This ruling follows another recent SAT decision where penalties against Mukesh, Ambani and others in a separate case were also overturned. So now we have gone through A to Z of Jio Financials. Let's come to the conclusion. Jio Financial Services operates through various subsidiaries and verticals, out of which many of them are at early stages. Despite company consistently reporting profits, the valuation seems to be elevated. The future is definitely going to be interesting for this company. But in the meantime, we advise investors to remain cautious and evaluate carefully while making any investment decisions within this company. That's a wrap for our deep dive into Jio Financials. For more such quality insights and A to Z stock analysis, subscribe to our Savart channel. We'll meet you soon in the next video. Till then, take care. Bye.